Assalamu alaikum friends. Welcome to part 2 of financial accounting. In this I'm going to cover section B questions and then I'm going to come up with part 3 as well. Part 3 will be discussing the other questions from section B once again. Okay. So in background we have Caswick acquired 80% of share capital of Devant. The summarized draft statement of profit or loss has been given to you. Then they have told that during the year they have sold goods costing to Devant and 30% of this goods remain in Devant company's inventory. You have to complete the following financial statements. Okay, so first it is the what is the topic? It is the consolidated okay, statement of profit or loss for the year ended 31st May 2006. Okay, it is for the year ended and it is consolidated. Both has to be correct. Next, the revenue. What is the revenue? The revenue will be, before going here, we'll go here and check. Okay, consolidated means you're adding both. Okay, so all your consolidation, everything comes in section B. Okay, so consolidated revenue is 8,400 of Caswick. This is the parent company. Plus, we are taking Durban company sales also minus what? 1,500. Okay, what is the 1,500? It is this 1,500. Okay, intercompany sales, you are deducting it. So the correct answer is this. Okay, next, less cost of sales. What will be the cost of sales? It will be 4,600 plus 1,700 minus again the same 1,500, this one, plus you have to add 30% of 500. Why 30% of 500? Because the difference between these two is 500. The cost is this, but you're selling it for 500, you're making a profit of 500 on that. 30% will remain on the inventory, so that's why closing stock you have to add, so it will be this. Next, the gross profit. Okay, so gross profit, if you see, there's no option, you have to type the gross profit. Okay, what is the gross profit? That means the revenue and the cost you get, it is 5150. Next, distribution cost. Okay, even the distribution cost you have to write. What is the distribution cost? It is simply this addition of this two. Okay, so the distribution cost is 2010. Okay, administration expenses. Administration expenses also the addition of this two, 700 and 450. So it is 1150. Then we have the profit before tax. Okay, after you deduct your distribution expense and administration expense from your gross profit, you will get the profit before tax as 1990. Then we have the tax. What is tax? Simply 600 plus 140, which is 740. Okay, profit for the year. What is the profit for the year? 1250. 1250. So after you deduct the tax from the profit before tax, that is known as profit for the year. Then attributable to how much? Equity owners. Okay, group profit for the year minus non-controlling interest. Okay, because non-controlling interest you are taking here. How much it is? It is 80. How 80? How 80? 80% you have acquired, that means 20%. Okay, on 400. 20% on 400. That is the non-controlling interest. How 400? Because you take the group profit for the year and from there you deduct the non-controlling interest. So the group profit here is 400. Okay, the one company. On that you take 20%. So now I'm going to close down the task 1 and task 2. Okay, does exist of which of the following factor illustrate the existence of a parent-subject relationship? Okay, this is a theory which you have to know. Significant influence? No, because significant influence means less than 50% or more than 20%. Okay, so it could be as associate also, not necessarily a subsidiary. Greater than 50% of preference share debt being held by an investor? Yes. Control? Again, yes. 50% of all shares and debt held by an investor? Yes. 50% or more. Okay, so non-controlling interest of 10%, that means you have held 90%, so again yes. Okay, 100% of equity shares held by an investor? Yes. Greater than 50% of equity held by an investor? Yes. Greater than 50% of preference held by an investor? Yes. It's a no. Okay, so if you see this 3 or 4 marks, so definitely somewhere some mistake has been done. Okay, what is the mistake? The mistake is this one is supposed to be no. Greater than 50% of, wait, 50% of shares held. This is no. Okay, when it's 50%, no. And the next one is 50% of shares and debt held. No, with this. Greater than 50% preference share and debt held by an investor. It's not about preference share now. Okay, it's about equity shares. So we're done with both the tasks. Now the next. Okay, so this is the last question. And Malware has an accounting year end 31st October. Accounting is financial means as the 31st October and our trial balance has been prepared. Okay, do each of the following items belong on this one? Okay, so you have been given. Okay, so there are 5 tasks here, a lot of things to do. So you just have to say whether it belongs to the place they are at. Okay, yes or no. That's it. So building at cost, it is debit. Yes. Accumulated depreciation. Okay. No. Accumulated depreciation is something you deduct. You don't include it there. Plant at cost. Yes. Plant accumulated depreciation cost. No. Okay. Next we have the bank balance. Okay. Bank balance could be debit or credit. So yes. Then we have a revenue. Okay. Revenue is no. This belong to statement of financial position. Okay, so not about debit credit. I'm sorry, I got confused. It's not trial balance. Revenue does not come in the this thing. Net purchases also does not come. Inventory, okay, it comes. No, inventory does not come. There's opening inventory. Cash comes. Trade payables also comes. Trade receivable also comes. Administrative expenses does not come. Allowance for receivable does not come. No. Return earnings, yes. No, return earnings, it does not come. I'm sorry. The closing return earning comes, not the opening one. Equity, yes. And the share premium also, yes. Okay. So I'm going to close down task 1. Task 2. The allowance for receivable is to increase by 5% of receivable. Allowance for receivable is treated as expense. Okay. Allowance for receivable is treated as an administrative expense. Year in general for allowance for receivable is given below. Prepare the double entry by selecting correct option for each row. Trade receivable. Debit, credit, or no. It is debit. No debit, no credit. Trade receivable. Okay. Next. Administrative expenses is debit. Allowance for receivable is credit. Revenue is credit. Sorry, revenue, there's no debit or credit. Because I was you know why I made the mistake? Because I was taking it generally. Okay, it was supposed that I didn't take it according to this one. Okay, I was supposed to look at this for trade receivable. So administrative expenses will come, it will be debited, and allowance for receivable will be credited. Revenue and trade receivable, it does not have an impact. Okay, generally it has revenue is credit, but I was taking it generally. I didn't link it to this. Next, I need to write this. Amount including the statement of profit or loss after the allowance is increased to 5% of trade receivable is how much? Okay, the working has to be done here. What is it? 5% of what? Receivable. Receivable is how much? Background. Okay. So trade receivable you have to look at from task 1 because all the tasks are connected. Okay, 5% of trade receivable you're taking. Trade receivable is 320. So okay, which is 16. Okay, and brought forward and then increase. Brought forward is 10 because allowance for receivable. This 10. Okay. And now it is they are saying that it is increased by 5%. Okay, so increase is how much? From 16 to 10. Increase in 6. Okay, so it is 6,000. If it's increased, it will be there in the this thing. You are writing 6 because it's already in 1,000. Now the task 3. Plant is depreciated 20% per year. I'm using the reducing balance method and buildings are depreciated at 5% on the original cost. Depreciation is treated as a cost of sales expense. Now, the year-end journal for building and plant machinery is given below. Using the information, prepare the double entry by citing the correct option for issue. Administrative expense. Okay. So administration expense, there is no debit or credit because nothing has been talked about. Cost of sales, yes, cost of sale because depreciation will be there, it will be debited. Building cost. Building cost is what? It is no debit or credit. It does not have an impact on building cost, neither plant cost. So no debit or credit. Accumulated depreciation will be credited. Even the plant accumulation will be credited. Okay. Next. Calculate the depreciation charge for the below for the year ended 31st October using the information to help you. Building and plan. How much for the building? You need to work out. Okay. So for building, if you see buildings are depreciated 5% original cost. What was the original cost? Again, we need to go here. Building was 740. So on that 5% you take, that will be the depreciation. Okay. Which will be 37. Just write 37 because already in thousands. And next. Okay. Plant. Plant is reducing balance. Okay, so reducing balance means it is 20%. Okay, just look at, so 220 plant, deduct the accumulated depreciation 110, on that you take 20%, which will be 22,000. Okay, now task 4 and task 5. Closing inventory has been counted and is valued. Ignoring the depreciation charge, calculate what is the cost of sales for the year. So you're not taking the depreciation charge. Why? Because they told depreciation charge is then the cost of sales. Just forget about it. Now what will be the cost of sales? Okay. So for that you have to see what is the opening inventory. It is 160. Okay. Plus the purchases minus the closing inventory. You have to know what is the closing inventory and the net purchases. Okay. So the net purchases is 1440. Okay, minus the closing inventory, that will be the cost of sales. So what is the closing inventory? The closing inventory they have given us 75,000. Okay, so now you opening plus purchase minus closing 1225. Okay, next coming to task 5, and this is the last. Okay, an invoice of 15,000 for the energy cost relating to the quarter ended 30th November 2007 was received on 2nd December 2007. Okay, just look at the date. Not even 1 month. It's just 2 days. Energy costs are included in administrative expenses. Double entry to post here in for the energy costs is debit what and credit what. And also you need to know the amount. So you debit the administrative expenses and you credit accrual. The amount to be posted with the year-end adjustment for the double entry amount is how much? It is 10,000. 10,000. How 10,000? How 10,000? 15,000 is for the energy cost. Okay, and you are taking into 2/3. Why into 2/3? Why into 2/3? You have to understand it. When is it? This is you are taking for the quarter. Okay, this one was for the quarter in 30th November, was received on 2nd December 2002. Okay, just wait a minute, I just want to look at the quarter. Okay, so 31st October, and this is to the quarter ended 30th November 2007. And if you see this one, it is 31st October. Okay, so October, December. In October, there are total 3 quarters. Okay, they're not utilizing the full 4 quarter. 3 quarter. Okay, out of 3, 2 quarter. So that's why it's 2/3 into 15,000. and hence we are getting 10,000. We don't care when it is received. Okay, when you're doing double entry adjustment, we see when it falls on which date. For the quarter ended 30th November 2007. Okay, so 30th October, if we see from October, so okay, so out of the 3 quarter, 2 quarters. So now we are going to, with this we finish the exam and just we are going to exit it. Okay, 100%, because section A also we have done it. So the next part 3 will be, I'm doing the extra questions from part B of financial accounting. Till then, don't forget to subscribe to my channel and do watch my other videos on the other 2 papers, F1 and F2, which is management accounting and business and technology.